market. Revenues for the quarter declined 0.5% quarter-over-quarter. Our goal in this region is to capture the rapidly digitizing market. We are leveraging our global scale and domain expertise to continue to move our portfolio towards higher value transformation projects. This focus on improving the quality of revenue is now clearly reflecting in our margin performance, which has improved 330 basis points over the last 5 quarters. Being able to sustain margins despite softer revenues is largely due to our ongoing transformation efforts. This includes several programs around delivery excellence and operational efficiencies. Across the board, we are pivoting our business towards high quality, high potential businesses and reducing our loss-making accounts. We are working on faster bench deployment. In the last quarter, utilization increased to 84.5%, an improvement of 80 basis points quarter-over-quarter. Our account segmentation strategy, together with a one Wipro approach, is definitely helping us seal bigger deals with existing clients and win in a consolidating market. And I'm proud that we are seeing these benefits within 3 months of moving to the new 4 global business line operating model. Amit will share more details shortly. Both on the delivery assurance and efficiency side, these actions are having an immediate positive impact, while also setting us up for long-term margin resilience. Because profitable and sustainable growth is our top priority. In Europe, we closed 3 large consolidation deals in Q2 at a 100% bid to win rate. Example, a global bank has selected Wipro as its partner to deliver multi-year digital transformation initiatives. For that, Wipro will work with the bank to build bespoke solutions to enhance its global products and services through responsible use of AI and hyper-automation. This will deliver superior customer experience, better use of data, better use of analytics, and drive significant operational efficiency. Our partnership strategy continues to stay strong as well. Bookings through our partners as a percentage of total bookings have continued to increase from 25% in fiscal year 20 to 44% in FY23. And actually this quarter it was at 53%, so 10% more. What are we seeing? Increasingly, clients are not just looking to migrate to the cloud, but also run and grow their businesses more efficiently on the cloud. Our full stride cloud services is setting us apart from competition and letting us tap into opportunities across the cloud journey. For example, a multinational healthcare and insurance firm wants us to co-create their consumer and digital experiences. As a strategic technology partner, we will build AI and automation solutions to drive speed to market, better client experience, and of course, reduce their cost. Our high-performance software engineering program will bring them at least 20% efficiency. Overall, this engagement will strengthen the client's workforce management strategy and expedite our tech rollouts. Now, if you look at the bigger picture in this, what you'll see is that our ongoing transformation is driving a substantial improvement in our market position. And that's in turn reflected in the types of deals we are winning as well. Clients now look to us to help them solution and orchestrate their transformation. They trust us with their complex challenges. That's reflecting in the latest customer satisfaction survey as well, with our NPS, Net Promoter Score, expanding by 840 basis points, which is very significant. I'll take a few minutes now to share an update on Wipro's AI 360 strategy. Since our announcement last quarter, we have trained 180,000 employees in basic Gen AI principles. We have rolled out persona-based learning pathways to create a pool of specialized talent with deeper technical expertise. We are working with our alliance partners to further enhance AI learning pathways through our AI and cloud academies. Recently, we launched a new Gen AI Center of Excellence with IIT Delhi. We are very rapidly integrating Gen AI into our processes, our solutions, our offerings. Thousands of our employees have or are starting to use Gen AI. In the HR function, for example, our teams are seeing significant productivity gains by using Gen AI for candidate background verification. Then in marketing, we're using Gen AI for content generation and translation. Tasks that used to take hours earlier now takes minutes. In sales, we're implementing Gen AI to do market research, improve sales collaboration, but also generate RFI responses. In our engineering business, Gen AI is helping with software development and lifecycle automation. One of the areas with the biggest productivity gain is in quality engineering and in quality assurance testing. Gen AI is helping with scenario creation, code generation, synthetic data creation, as well as execution at scale. Initial pilots of these Gen AI apps have been so successful that we are now rolling them out to all our employees. On the client front, Gen AI is now a part of every client conversation. There's tremendous interest in exploring new use cases, as well as understanding the benefits and the implications of this technology. Imagine the number of Gen AI active projects have doubled than just 1 quarter ago. For now, we are seeing rapid adoption in healthcare, in consumer, in financial services, and I would say with high tech and utilities following closely. One example I can share with you here is we're working with a US-based health insurer to deploy a Gen AI-based chatbot for their agents. We're developing a solution that is fine-tuned to be more contextual, so that agents can provide more personalized assistance. The solution is driving 30 to 40% reduction in operations costs, significant improvements in agent productivity, of course, and therefore improving net promoter scores. Another example, we are working with a European multinational telecom company to unlock value from data. Working with different vendor tools and software kits, we are generating high quality synthetic data, which allows the client to increase cross-border collaboration, mitigate bias, and eliminate distribution limitations that exist in real data. As the technology evolves and GenAI output becomes more accurate, we expect demand for our GenAI services and expertise to increase greatly over the next 6 to 12 months. Frankly, we're very excited by the opportunities GenAI presents, and we're investing in new use cases, solutioning for clients, as well as upskilling our employees, because we want to take a leadership position in this space. A word here on our guidance now. For the next quarter, we're guiding for a sequential growth of -3.5% to -1.5% in constant currency terms. We expect margins to stay range-bound, as we've seen over the last few quarters. As the market starts to turn around, on the back of our transformation and efficiency plays, we expect to start seeing improvements in the coming quarters. Despite the global slowdown, Wipro will continue to invest in its people through training opportunities, leadership development, global exposure to new clients and technologies, and by rewarding them with merit-based salary increases. Wipro's intellectual capital, our people, are definitely our biggest strengths. We're continuing to strengthen our foundation, streamline our operations, and moving towards a more modern, dynamic culture. We have the right strategy, vision to keep us competitive and resilient. With that, I'll turn it over to Aparna for her comments. Thank you.
A very, very good evening to everyone joining us today. In my update, I will cover some key financial highlights for our performance during the quarter. Our IT services revenue for Q2 decreased 2% quarter on quarter in constant currency terms, which was at the lower end of our guided range for the quarter. We are happy to report another quarter of healthy deal bookings. In total contract value terms, we closed large deals to the tune of $1.3 billion, which is a 79% year-on-year growth. We also booked 14 deals with greater than $30 million of TCV range. Total bookings from a TCV standpoint stands at $3.8 billion, which grew 6% year-on-year. Turning to margins. Our ongoing focus on operational improvement has ensured that our margins remain steady even in a softening revenue environment. Our operating margins for the second quarter was 16.1%, which is an expansion of 100 basis points year-on-year. Shifting to our cash flow performance for the quarter, our operating cash flow for Q2 was rupees 38.6 billion, which was 145% of our net income. Our free cash flow as a percentage of net income was 149%. Cash conversion has been strong even in the first half, with at 137% of our net income. At the end of Q2, we had $4.1 billion of gross cash and $2.2 billion of net cash on the balance sheet. Now, let me share certain other important details relating to the financial performance. Net income attributable to shareholders for the quarter was at INR 26.5 billion rupees. Our EPS grew 4.1% on a year-on-year basis. Our effective tax rate remained flat during the quarter at 24%. On the Forex front, we realized our dollar rupee realizations in IT services for Q1 was at rupees 82.54. Our DSO for the quarter at 79 showed an improvement of 3 days year-on-year. Over to the guidance for the next quarter. Our guidance outlook for the IT services business segment is to be in the range of 2.617 billion to 2.672 billion. This translates to a sequential guidance of negative 3.5% to negative 1.5% in constant currency terms. Thank you, and over to Amit.
Hello, everyone. I'll share some updates on our business transformation and how it's reflecting in our steady margin performance. Our new 4 global business line model has allowed us to deliver a one Wipro service excellence approach to our clients. It is reflected in our latest customer satisfaction survey, with our NPS expanding over 840 basis points. This directly reflects our performance with the clients, delivery, program governance, and our capabilities that is setting us up for further strengthening our delivery-led sales. On the delivery excellence side, we have been very focused on consistent, efficient, and productivity improvements for our clients. Automation and Gen AI is our cornerstone here, with the corresponding productivity kicking in both on delivery and functional sides. Over the last quarter, on our operational efficiency front, utilization is now at 84.5%. In fact, utilization has increased by almost 470 basis points in the last 4 quarters, including utilization of our next-gen associates. We have taken several actions here, from sustained bench reduction to pyramid optimization, to onshore-offshore rationalization, and rigor around our subcontracting costs. Alongside, we are keeping a close eye on discretionary spends with increased rigor on cost and efficiency management. Thierry has talked about skill being our biggest currency. On the talent reskilling side, we continue to scale Gen AI talent. As you heard, over 180,000 of our employees have taken the first-level Gen AI course. Focused upskilling initiatives across skill families are in place now, including several account academies. These are collaborative initiatives with our clients. They're providing us a skilling roadmap for our teams to serve them better. I'm pleased with the progress that we have made so far, and a lot more lies ahead. Now, I turn it over back to Sanubin.
We're now going to start the Q&A. If you have a question, please raise your hand and wait for the microphone to be passed on to you. We ask that you please introduce yourselves before you ask your question, and please try to limit your questions to one so everyone can get a chance to speak to our executives. Thank you.
Hi, I'm Ritu Singh from CNBC TV 18. The first question is on your constant currency revenue growth. For 3 quarters now, we've seen a decline. And your guidance for the next quarter as well also shows a negative growth of 3.5% to -1.5%. While your peers are also talking about this slowdown in the discretionary spend, why such a drastic reduction in, sort of guidance? It's much below what the street had also factored in. Where are you seeing this weakness apart from, the larger markets that you've highlighted? And when is that turnaround that you're talking about going to start to materialize? And if you can add a word on the margin levers as well that you're using to get to that aspirational level of 17%. And one question for Saurabh as well. There's been a decline in the headcount, which has continued, I think, for the last 4 or 5 quarters now. Any hiring plans for the year, or, given that we're getting into the December season, will you stay away from campuses for the year?
Okay, all right. So let me respond to the first part of the question. For several years, we've had a market of growth where, we've been able to grow quite significantly. Over the last few quarters, what have we seen? And I think I'm reflecting for the industry. What we have seen is that, on the one hand, there's a good volume of business, and on the other hand, there is a significant reduction of discretionary spend from clients. Bottom line is, there is not the same level of growth in the market that what we had before. For us, it's a fact. We are not growing. You said it, definitely. And that's, a reality. But what's key for us is to make the right investment, make the right decisions now to make sure that when the market picks up again, we are ready. So it's about, making the right investments. It's about, working on our efficiency model, what Amit described. It's about continuing to invest in larger deals, win those large deals. You've seen this is the best quarters we've had in terms of large deals. And I think it's an encouragement on the fact that we continue to get better quarter after quarter on winning those large deals. So, and then, the work on the margin, what is clear is that, despite a market where there is no growth, we are doing what's required to maintain our level of margins to the place that we've, delivered on for the last quarters through, efficiency program, working on how agile we are. We've made an organizational adjustment 3 months ago with the creation of 4 GBLs, just allows us to be more agile, more nimble. We also continue to invest in our account strategy. And I think it's very, very important. When the market will pick up again, this will pay off. Saurabh?
So hiring, it's a function of, our current supply chain in terms of the demand we have, the bench we have. Amit spoke about the utilization improvement. So we will continue to hire and be hiring every quarter. From a campuses standpoint, which you want to know, our first is to make sure we honor every offer we have made to our people. And there are still some people left to be honored. So we'll be doing that before we go to the campuses. So, and that's our intent, and we will see much more better view of the thing as the market looks up. But right now we are very focused on making sure we honor all the commitments we have made in the past.
These commitments that are yet to be honored, that you said, out of the total?
No, the numbers are ongoing. Every quarter we are onboarding people. So, I don't know the exact number of people, but what we had made last time, which we had said that there are people who have yet to be onboarded. We are going to continue to onboard them right now. First, that will be the priority for us. Thank you.
Hi, Haripriya from Money Control. One, I wanted to understand, you're rolling out your wage hikes are this quarter, and you've maintained that your margins aspiration is 17%. But do you expect an impact in Q3 because of the fact that you're rolling up the hikes? Are you seeing any cancellations or ramp downs? You talked about delays in closures, but are you seeing other impacts as well? Because you're saying that your large deal TCV is the highest in 9 quarters, but your revenues continue to decline. I just want to understand the dichotomy over there. And wanted to get a sense of the variable pay for the quarter. That's it.
Of the?
Variable pay for the quarter.
Do you want to take the variable pay?
So variable pay for the quarter will be in line with what we had done last quarter. They'll be different for different units based on their performance. Approximately around 80% is what people will be getting.
Yeah. So you want to talk about the margin?
So we don't guide for margins, like Thierry said. Yeah, so like Thierry said, we are likely to remain range bound in terms of, the margins that we've delivered over the last few quarters. There are headwinds, you spoke about them. Our guidance reflects a weak revenue environment. There are also furloughs, and we are making investments in people. So it is a challenging task, but we have several initiatives in place that Amit spoke about. We have enough levers as we look forward, including fixed price productivity, in terms of even using AI. It's a huge opportunity. There are pyramid improvements. There is work that has been initiated on, in terms of, and, of course, the continuous rigor on, the discretionary spend cuts. So those are things that we are looking ahead, and there are enough levers for improving margins as we go.
This is honestly, yeah, sorry, I forgot that point. So I can go back to what I was saying about a quarter ago, because this is more or less what we are seeing. And, you know, I'm not hearing anything different from my colleagues. I believe that, you know, what's happening at the moment is there is a demand in the market. We are seeing deals. Our pipeline is actually very healthy. And, you know, the level of bookings, TCV, has been pretty strong for us. But there are, you know, ramp downs, there are reduction of discretionary spend. We see that. Consulting business is more exposed today. We know that, and will be the first one to rebound. I think it's, you know, that's what we continue to observe. I don't have in mind, you know, any termination or any, so it's just a lot of this discretionary spend that have been put on hold, in particular in BFSI, in consumer communication, sorry, and in technology.
Hi, Thierry. Chandra Shrikant here, Money Control. You mentioned that your TCV is the highest in 9 quarters. If you can give us a sense of what percentage are renewals, how much of this is net new deals, and why isn't this translating to revenue growth?
Okay.
Question one. Question two, analysts are also concerned about the senior management attrition at Wipro. I think you've had, 9 top-level exits this year, including Jatin. So why are things not settling, despite putting a new structure in place? How are you planning to address that?
Chandra, so I'll take the 2 points. I'll start with the second one, which is the senior attrition. 3 years ago, when we designed our strategy for Wipro, we have laid out a significant transformation of our organization, right? Redefining our ambition, resetting our go-to-market strategy, defining key strategic markets, investing in talent, and so on. To drive this transformation, it was very clear to us that we needed to bring talent from, multiple places. The value of driving more diversity in the organization was required to drive this transformation. And that is what we've driven for the last years. I'm very happy with where we are. We have a great team. We have leaders in the key roles to drive, the agenda. You mentioned Jatin. So Jatin has been our CFO for many years, as you know. He has made a decision. In a way, I would tell you, I'm also proud for Wipro that we are, our talent are, being looked for in the industry. I wish him the best. And I'm very glad to have Aparna. She's doing fabulous. She did a fabulous start. And that's the strength of the leadership of Wipro. We have the next generation of leaders for this organization. So that's on the point number 2, okay? And I'm not absolutely do not feel in a context of instability of leadership at all, honestly. On the point number 1, which is the dichotomy between, the volume of deals and the revenue. Again, I don't think we are the only one seeing that phenomenon, which is that, there are quite a bit of large deals. Clients are looking at ways to drive larger program to reduce, in particular, to drive cost out. And we are winning in a lot of these deals. So this is good. But, the typical pyramid of, large and smaller deals has evolved. There's a lot less of those very, very small, what we call the discretionary spend, which typically is not translating into a very, very large deals, but many, many smaller, has reduced. And so I understand your question, but this is very rational. In fact, yes, we have great volume of large deals. We actually continue to increase our backlog of committed revenue for next year, which gives us a lot of confidence, because we know that discretionary spend will resume. And by the time it will resume, we'll be ready to start, at full speed. Make sense?
Uh, Sir, hi, Varun from Mint. Just a follow-up to what Chandra had asked. Can you please tell us what is the net new deals from?
Right. So, Varun, we are not disclosing this number, but I would tell you, because we are tracking it and we are looking at it, there's a good balance. This is basically, and even when, so it mostly coming with existing account, but new piece of business, new stream of revenues.
Sir, here
So
is where-
this, what happens, Varun, sometimes is you might have a component and then you have an extension, which is including a bigger portfolio, a bigger perimeter. That's what we are seeing.
So here is where your TCV number appears to be misleading. And pardon me for asking that. Because if we look back year over year, of course, your revenue base has grown. And so the TCV, which includes renewals and net new deals, will also increase. But if I have to look at your other metric, that is the number of new customers, which has fallen at or rather has halved, which is a pretty scary number.
No.
Which tells us that perhaps Wipro's sales engine is not active what it used to be about 12 or 18 months back. Because if I look into just the last observation, your revenue, quarterly revenue after December would be almost the same what it was October, December of 2021. So you are actually going back 2 years back for your quarterly revenue. So the macroeconomic hasn't really turned that bad, where Wipro is actually going back with regards to new deal wins or with regards to your quarterly revenue. Thank you.
Varun, thank you for the question. So let me respond to that. First, the number of clients. I was impatient to respond to your point because it is our strategy. We want to reduce the number of the very, very small clients. It has always been our strategy to focus on our larger accounts and grow them. And that's how we've been able to double the number of $100 million accounts. So for sure, if you look at the number of accounts, you know, Wipro used to have many very, very, very small accounts. And the cost of investment to grow these accounts was, you know, not productive. So our strategy is to focus on large account, and that's what we are doing. So no wonder that you see this pattern. It's on purpose. On the revenue growth, you know, we've been, if you look back over the last, if I take as a point of reference 2020, when I joined, we've grown north of 40%. For the last 3 quarters, indeed, we are in a different market. And that's a fact. I think we are, you see the same patterns in this industry today. What's key in such a market for us is to make sure that when the market rebound, we are ready. And so very important for Wipro to keep focus on the key elements of its transformation, to make us more agile, to be able to, increase the margin as we mentioned, midterm. And that is clearly what we are doing at the moment.
Thierry, hi, Beena here from Economic Times. Just an extension to that, by when do you see the deals translating into actual business? Can you be more specific in terms of, which quarter do you see that coming?
Yeah.
And secondly, what is the purpose of the merger of the units, just to get a sense on
The merger
of the 5 units which has been announced today?
Oh, legal entities.
Legal
Sorry.
entity.
Okay. You want to take that one, the legal entity, or this is a technical?
Technical,
It's a
yeah.
technical merger. It has
Just for
nothing to do with
administrative
business.
convenience, yeah,
Nothing beyond that.
yeah, nothing
It,
beyond that.
it is not impacting the operations whatsoever. It is a legal optimization.
Administrative convenience, this has nothing to do with the business.
The first point was on outlook, right? Considering the market conditions stay more or less the same, we will see a rebound in the next few quarters. I cannot tell you more. We are not guiding beyond the given quarter, but that's the feeling we have.
How do the next 2 quarters specifically look in terms of translation of these?
I just said,
Next 2 quarters specifically, because
No,
you
no.
said you expect a rebound,
you've
but
got my guidance for next quarter, for coming quarter.
okay, thank you.
So I'm Akanksha from Business Today. I wanted to understand what's your outlook for your consulting business, especially after your restructuring exercise. The market hasn't really been good for the consulting business. How do you think it's going to react in the next year?
You know, the market continued to be difficult for the consulting business. And as you know, especially in BFSI sector, right, which is a market where discretionary spend has been, significantly reduced. This will come back. I've always seen that this market is very healthy, is well positioned. I mean, this market, these operations are very healthy, well positioned. They'll bounce back as soon as, the volume of discretionary comes back.
Could you also share some plans about your AI 360 policy? I mean, you've already upskilled a significant part of your workforce. You also have a center of excellence. Any other plans for the upcoming quarters?
It is, there's not one single management meeting in Wipro where we're not talking about AI 360, our program where we are massively investing, but also transforming ourselves. Imagine 180,000 people trained on Gen AI in 3 months. And we continue. It's only, the first step. We're gonna inject AI into every single solution offerings in the next 6 months. We are injecting AI into every of our processes internally. All my colleagues here have their own AI and Gen AI agenda for the coming weeks and months. So we see it as an exciting opportunity for Wipro. We feel we are well positioned. We have a lot of engagement with clients. Still not huge in size, but when you look at the number of this active engagement, it has doubled just in 3 months. This is not usual, right? It shows that it is a reality, that, and that we are on top of it.